Hope you're having a good weekend. Just for today's kind of recap, really, just wanted to recap on some of our tools that we look and use, bringing everything together, really. So before the week starts, you can say, right, what tools am I going to look for? A quick recap, refresher. So you've got obviously your indicators. We've got our awesome oscillator, got our MACD, we have RSI, but also for the actual price action. So looking at support and resistance levels, we're going to look at some of the chart patterns, so bear flags, channels, and again, just keeping it really, really simple, just going back over it. I really find it useful looking back at previous price action, just to remind us moving forward how straightforward it can be. And the more you go back and the more you look at price action, what's happened, the more confidence you'll have to then trade it. When you see that setup, it's about literally just going over repetitively, spotting the chart pattern, knowing the setup, and then trading it. So, I mean, this is, again, for me, I love minute 15, and this is sort of Wall Street. It really doesn't matter what you're trading, they work on all of them. And again, just to start off with, and how you can sort of identify it, if I just start the analysis here. So, what we had 20th of September, we had a major low and it had a huge move up. Okay, comes back, retest. Without getting too technical, but I'll just talk you through it. Obviously, we always look after the first move, don't need to chase it, always wait for 61.8 to 88, and it gives you entry. And again, for this move here, if you had entered, you would have got 1,324 pips in 5 days. So, 5 quid a pip is crazy money. 2 quid a pip, 1 quid a pip, 50p a pip. But at this point, when we're learning, it's all about just spotting the setup. So don't worry about the money. It's all about looking for the pips, especially on demo. These are great. But just take that off. So what we know is we've got a bounce there. So all of a sudden, we're creating a huge buy zone. So what you can do is once you've had that, is move it across the chart. So you've had a double tap. And obviously at this point, that price, nothing else has happened. But you can mark that on your chart as an area of interest. And I'll just move that over. And what you can see, maybe we move that just slightly higher. This black line as well, just slightly higher there. You can just see the amount of times when price comes back here. So again, none of that has happened. Price comes back. This is a little bit of a naughty, pretty much a stop loss hunt, I think, there. But it gets you, how many times? So you have one move, 718 pips. At that point, obviously, you didn't know, but then you would know this point, 61.8 to 88.8. You would know that's an area to enter. That's your bite of the cherry. That's, not chasing the move, wait for it to come back. Huge move. Comes back here as well. Okay, it has that little drop down. Naughty little stop loss hunt. But again, 815. Again here, 668. Again here, 1,000. So we'll move this one off because at that point you didn't know it was going to rally so hard necessarily. And then, as you can see, 1 attempt, 2 attempt, 3 attempt, 4 attempt from that green box. So you've got that huge area. Now, what we can also do, if I clear that off, you can look for the sell zone. So we can do exactly the same on the sell zone. So again, we start with the main top. I mean, you could, whether that's a stop loss hunt as well, but there's no exact science to this. It's literally just looking through it and picking where you've had like multiple sells. So again, here, you've kind of got, even if I come across here really and start looking at these prices up here, it's multiple areas where the price is sold down. So you know that that's where kind of there are sellers. So if I just put it here, you can see multiple sells. So again, you can, before price even happens, this point, when you've had a previous high or previous low, then again, just like look at that and look for, this is where, potential sellers will be waiting. So you can say, right, well, if you ever miss that first move, that's what I say, don't worry about missing, picking tops, picking bottoms. Wait for that move, and you'll normally, like we had here, you'll very often, nearly always get like a second chance. So we had here, I might have say it again, just put that there. It's just so simple. And that's what we want in trading, just to keep it like really clear, really simple. So then again, we're kind of now actually, we're in a range. So here's our where sellers are. Here's a buyer. So again, you don't really want to be buying into resistance, and you don't want to be selling at support. You want to ideally how you would play this. Price breaks above, then it comes back down for the retest. And if the indicators are right, and then it goes again. Alternatively, if price comes down, crashes back through, you don't want to sell down here. You could wait for it to break out, wait for the retest, and you wait for the price to then come back down. Now, the way Dow's been incredibly volatile. We're currently looking, the range of here is a 1400 pip range, which ain't really great, unless you get a good entry. So if you're, you want to sell high, buy low, and avoid the middle. But obviously, it's quite a big range. So what we're going to look at is, for this week coming as well, possible setup. So within this range, you've had other sell zones and support. So if I put this in here, you're going to see there's like a mini zone within it. So that just helps you to get a better entry. So again, you can see big sellers comes back up. So again, if you miss that move, don't worry, it comes back up, sells back down. And then they use this, so breakout. So the same concept up there that I'm talking about. You've had the breakout, don't chase, retest, and that's looking for entry, bang, and then up we go. Okay, so at the moment, if you're not in a trade on Dow, Wall Street, you'd be like, well, why would I enter here? Am I going to sell it? Well, okay, if I'm looking for a sell, it can still go, too many pips for my liking. Would I buy? Well, the real demand zone is 1,000 points lower. So when you start building this picture, there's nothing really technical about that, as in hard to understand. Is you literally picking where the previous sells and buy zones were. The middle one could be open to a bit more interpretation, because you could say arguably, there's a huge demand zone here. You can see multiple attempts, bang. But you could get carried away and end up having loads and loads of boxes on your chart. And it's just like, well, keep it simple and just use the tool. So there's like supply and demand zone for Wall Street on a minute 15 at the moment. Some other things I just want to talk you through. I can take all that off. Next thing I want to just talk you through is just minding about breaks and sells. So again, using this, see this trend line. So I'll just start that again. Sorry. So again, we're looking at this double tap. This has obviously offered huge, strong support. So all I got to do again is just drag that out. So you can see, try and join at these bottoms for this style. There's different ways of doing channels, but now, I mean, it's remarkable. So you've got a double bounce, up we go. So all of a sudden, you've got, using the same concept, this was support, huge support zone. What's happened? It breaks below that line. So again, never chase. You wait for the breakdown. You wait for the retest, and look at that action. And I'm going to show you that chart pattern in a minute. Bang, down it goes. Now that actual chart pattern there is a bear flag. So again, what do we get? Bear flag, strong move down, sideways slightly up, consolidation, and then roughly an equal leg down, can be more. So again, there's no Fibonacci's there. There's nothing technical about that. I could even take the indicators off. It's purely look at using these strong levels. So again, we were looking previously at horizontal support and resistance, but you can have obviously diagonal. It's effectively support and resistance diagonal. So again, use these. Look at the low point of the move, comes up, and again, price breaks down, can't break above, and then leads to a huge sell-off. So it couldn't get above and hold 1,200 pips almost. And this is, we can do this time and time again. You can extend this out, and then we'll probably see at some point again that line almost being tested. What we can also do is clone that and say, we've now all of a sudden got this channel by just cloning what was previous resistance. We now have, really, really clear channel that the price is respected until it doesn't. So again, just remember that you've got your trend line, support and resistance. You've got bear flags within that. And again, at the moment, what we could be seeing is we could potentially be seeing might be a bull flag there. But again, to stop you chasing the move, stop you getting in, just remind us of where this, I think it was about there, that sell zone was before. So again, you got to be careful that you don't get like a false bull flag breakout, so it comes up into resistance and then just sells back down. But again, that's another really simple technique. There's no indicators, nothing technical, there's nothing difficult about that. We're just looking at where those, horizontal support and resistance, and then trend lines and channels. So that kind of sets you up again. You can always extend them out. Some people they'll just do a trend line to there. But what I find is by extending it, they'll normally get revisited in at some point in the future. Exactly the same as this. So if you just did that trend line to there, it doesn't offer you anything. But all of a sudden, if we then start, if I put that on the low point there, there's a low, and then just extend that out, it all of a sudden gives you that. So yeah, again, a really, really useful trend lines. Be a powerful, really, really useful pattern. So take all that off just as a reminder. Now bringing in our indicators. So what do we see? What do we have? How do we use them? And this is obviously incredibly powerful. Let me put that there. What we're looking at is a reversal in the market. So after a strong move down or a strong move up, you want to see the indicators saying something different to price. So normally these indicators will, so we've got awesome oscillator here, MACD here, RSI there. And what you'll see is they will map each other. So RSI is very, very close to price, but I see RSI as the leading indicator. And so the others, actually, most of the indicators, when you look at them, they'll tell you there's going to be a reversal. So what do I mean by that? Divergence. So price continued lower, and actually MACD here was getting stronger. Awesome oscillator getting stronger, and RSI, if I put the low there, got stronger as well. So actually, when the price came down here, it's clear, you can see actually just purely price action, those strong wicks now off the green candlestick, supported by the three indicators. When this indicator here, the green MACD crosses over, that's when it's time then to start being alert, time to start saying, let's get ready. So price is there, then you're looking for some strong candles. I would imagine a lot of retail would get in, at this point. But again, these candlesticks, actually, look at the time. That's probably midnight. I expect most people are sleeping. But again, doesn't matter what time of day it is. You'll see here, I got the two moving averages, got 9 and 20. And what you'll also see is there's no real strength to those candlesticks. So people start buying here's too early. You want to, this little drop here, then probably a little flush out, take out some stop losses, and also for them to get the best buys in the market. If you want to play it even safer, you wait for 1, 2, 3 indicators to confirm, and then at this point, moving average 9 crosses 20. So again, you might have missed, trying to get the exact bottom is just silly, really. By waiting, you've got 120 pips that you might have missed out on, but it goes up 850 anyway. So again, you just don't need to worry about trying to find that perfect entry. Use these tools, 1, 2, 3 indicators. That's telling you there's going to be a reversal in the market. The market's going to go, it was coming down, so now it's going to go up. And then it's about entry. You see some strength from these candlesticks, and then you see the moving average crossover, short term moving average 9, going into sort of medium term 20, and then up we go. So it's a trend change. And then you do really well. Actually, the moving average goes up. Sorry, the price goes up sort of 1,300 pips. So again, at this level, what do our indicators tell us? Well, as we are at the moment, there's no, or if there is, this marginal divergence. Certainly not any extreme divergence on the awesome oscillator. Possible, it's marginal again on the MACD as well. There is divergence there, and then you've had that red cross. So again, you would have it there on the MACD there, crossover there. Then the moving averages cross here, and then we've obviously had some consolidation sideways more than anything at this stage. So for me, in an ideal world, it would come back up to again, we don't want to have to chase the first move down. Comes back up, and then it goes. Just look at this. These indicators sort of right now is just not really telling you anything. They're all on the the 0 point. RSI is not in an extreme area. So again, you got trades, you got buy, sell, you got do nothing. It's probably a do nothing at this level. But yeah, the indicators are powerful. So we've had our buy side. Just see if we can find a sell side. So if I just take everything off, you can definitely see one straight away here where MACD gets weaker, also oscillator gets weaker, and you've got RSI. So the red arrows are showing you the divergence. And why is what's going on there? You see where price was getting stronger and the 3 indicators getting weaker. So you say, right, where's my entry? Ideally, you get 2 barrel bull symbols that pop up. And we're looking. So we're alert at this point. So at this point here, we're basically saying, right, there's going to be a reversal. We need some evidence of that reversal before we enter the trade. So what kind of tools, again, can we start looking at? Well, you could say at this point there, yes, that's after these have all gone off. At this point, we've got moving average crossed over. So that was at 34,914. The high of the move was, I mean, on Wall Street, it's not a lot, but it's still about 100 pips higher. You could have played it safe. You could have then closed the trade when obviously the moving average crossed to the upside, and then you could have potentially re-entered. You would have obviously taken a small hit there. Then you had the move here. I mean, with Wall Street, I do like sometimes to have a slightly wider stop loss just because of these naughty little moves there. I mean, I'm sure that move there, this is pre-market open. Market opens up. They would have seen a lot of sell orders come up, drive price up in the early session at 3:15 to 45 minutes into the open. Take out your stop losses and then drop the market. Obviously, you can see a huge drop there. But say you got in at this point, it potentially gave you 1,500 pips in sort of 3 days. So really, really good trade, good setup. Really, really simple. When you go back through the tools, you say, wow, this is easy. Of course it is, because the price action has happened and it's easy to spot. But once you keep looking at these tools all the time, just keep looking at the tools that work. These setups work. It will just program you. So when you're going to place trade, say, well, is that a setup there? If it's yes, then look to trade. If it's no, don't trade it. It really takes the stress out of everything. It's so simple. It is easy to follow. So please go back, use your time. Hopefully this video has been helpful. Just as a quick reminder of some of the, how simple trading can be. It's obviously always our mind that plays the games. It's always our mind that makes us doubt entering, then we miss a big move, or trying to overcomplicate things. But you really don't need to do it. If you just look for these setups, and this works on all markets again, look for the setup. So ping, ping, ping. Have we got, this is for reversal, of course. So when we're looking for a reversal, have we got the 3 indicators going off? Yes. Then do we have the moving average crossover? If it's a yes, then enter. Enter. Again, if take all that off now, just go back. Just have a look again. When you see, these strong moves like that, when you got the 61.8 to 90 on the fib, just move that across, and you can see, we looked at it earlier. You can see huge. Then you say, right, well, where's a big sell zone? Stop you from going long, near the top. All of a sudden now, so I can move this over and just say every time price has been here, it's led to a sell. So when it's in there, we're in a range. If it breaks above retest goes, we're going long. Breaks down below, and then we can look for swing short. So just trade the price action. Study as much as you can. Just get these into your brain. Don't need to overcomplicate things. You don't need to look at reinventing something new. Just follow these rules, and it will help you, and it will make you money. So any questions, just pop up in the group. Let me know, and I'll be able to answer them for you.